I'm gonna cover something called liquidity pools, okay, or stop runs. Okay, I'm gonna cover it quickly on this presentation today. All right, so stay tuned for that one. But with this bias, okay, all you have to do, when I gave that bias, okay, all you have to do is now go on to the dollar crossface and do the opposite. So what do I mean by that? So if dollar is going to go up, it means that these pairs are going to drop. Yeah, all these pairs are going to drop because the dollar is king. If dollar is going up, these pairs will bend their knees to the dollar. Okay, so that's what we got. And today, with what we have, I personally think, and that was one of the things I was going to talk about, liquidity pools and stop runs. When we are in consolidation market, the market that we are in right now, price is not gonna run one way. Yeah, it's not gonna do this, or it's not gonna do that. You have few of them doing that, and you'll be lucky to be in those ones. Okay, but generally this is what will be going on. Pay attention. All right, below swing lows and above swing highs, okay, we have something called liquidity pool, or where most people will put their stop losses. All right, so when we are in these conditions, that's all the market is going to do. It's going to go around taking out stops. Okay, let me put an X. Taking out stops and running the opposite direction. Yeah, market is going to take out stops and run to the opposite direction, and that's all this condition is. Okay, it's not really apparent on here, but because we are in overall large range, you are going to see it on the pairs that you trade. I'm going to go on euro and show you quickly how it looks like. Okay, it takes out the stops and then run down quickly. Yeah, takes out the stops and then run up quickly. Stops here, there were stops there, and it took that yesterday and then it ran down quickly. What is it run? Where is it running to? It's running to pick up another stop there. Yeah, that's all the market is doing at the moment. So if you're not lucky and you happen to be selling short here, like we did, we actually went short up here and we're looking for price to come down there. Immediately it took out these stops, sorry, that one. Okay, you can see it took out that one and flew all the way up, took out this one and flew all the way back down. Took out that one, flew all the way up, took out this one, dropped back in and went up, taking out that one, dropped back down. Okay, that's all the market is doing, and you have to be really careful in these conditions because it will kind of your mindset and your psychology about the market will be affected drastically, and you might think that this is too hard and you cannot do it. So I advise my Signal group members to either sit and not trade, or when they are trading they should risk very small in terms of what they risk in the market. And if they are not going to risk small and they are going to still trade, if they do get a trade, they should take profit early. They should be taking profit as price is moving. So when we do get a position, take profit, because you don't know where it's going to turn. All right, so that's all the market is doing currently, and it's very frustrating. I mean, this signal this signal I gave them, it came there last night, and I told them to wait and see what London will do. So if you don't wait and you want to take it, this is what's going to happen. And it's not that it's wrong, it's because of the condition that we are in. If this was a normal market condition, this level should hold. Okay, this level should hold, but because we are in a market where dollar is going in consolidation, those people that have money, right, they're gonna move this market randomly. It's not gonna respect structure, it's not gonna respect levels, it's just gonna go through. So if you're lucky to get one that respects structure, then you have to be nimble and take something off when price goes your way. So you can see what I mean by stop runs. Okay, liquidity pool. There was a lot of money sitting up here, taken, and then drop back down. Went back up, couldn't get above it, drop back down. Where is it dropping to? It's dropping down to take out lows. Yeah, and then rally up. Where did it go? Above this high. There. And taking those stops out. So those who were short going down, if you were short up here going down and expecting it to go down like it's doing now, you got killed there. And then if you were long and you were going up, you got killed there. You see what's going on? So it's really frustrating. Let's go on to another pair. Same thing here. Yeah. Take in, drop back down. Not take in, drop back down, take in. Took price up. Now everybody is trying to buy this market. Right? Everyone, because it's going up. So what they do is send it down. Yesterday I mentioned about this market, the way it's going up. I don't like it. This is not how market goes up. Okay, if it's going to go up, it should go up with large candles, not Mickey Mouse candles. So it's subject to what we are seeing. All right. So the point of this, all this talk, is for you to be careful in the condition that we are in. Okay, it's easily, very, very easy to blow your account in this condition. Right, I've done it several times in the past, and currently I am demo trading. If I'll be honest with you, I'm demo trading because the condition is not beneficial for me to waste my mindset on it. Yes, I can see some setups, but I would demo trade it rather than trade it on a live account and be frustrated. Okay, the second 2 weeks of June, yeah, from the third week of June till now, okay, the market has been like this, and it takes a while to kind of get it, because initially you think you are doing something wrong, and it's normal that you think you're doing something wrong. Then as time goes on, if it keeps repeating, then you know that the condition of the market is not good, so you stay away. Professional traders will not be trading this condition. They will sit on their hands and watch. Okay, they will sit on their hands and watch. Yeah, I know a lot of people that were long on euro, but again, that's how the market is. because of the condition we are in, this run will cause a lot of people to chase it and it will bend them. Even this run currently, this down movement that it's doing, I'm not expecting it to continue going down. Okay, where we are now, there's a high probability, okay, and I was going to talk about it. There's a high probability for price to turn around, but when it turns around, it's not going to the moon. What we have to wait for, everyone, if they do understand trading, is to wait for this beast to show where it wants to go. Okay, wait for this beast to show where it wants to go. Does it want to go up or does it want to go down? Trust me, when it does go up or down, trading is very, very easy. Well, to those who understand smart money trading, when this beast is dropping like this, boy, it's very easy to trade. Okay, even in this small movement to the upside, it's very easy. But when it's not long term, or let's say within 5 days, giving you a specific direction where, okay, within these 5 days I'm going up, or within these 5 days I'm going down, it's hard to trade. So what do I recommend looking? What you need to look for is, if you understand scalping, okay, if you understand scalping, that's the condition we are in. You're looking for 30 pips, 40 pips maximum, and be done. Be content, be happy with that, because it could just come back and bite you and there's nothing you can do, and it's frustrating. You will lose your mind if you're not careful in this market condition. Okay, so like I said, this is all it's doing, and the liquidity pools, or where people place their stops logically, because that's how everybody has been trained, and that is where price is gonna run to and go the opposite direction. Yeah, and that's all price is doing, going one way and then change and go the other way. I've covered that one. Even this one, yesterday, like I said, this should go down. As soon as I mentioned it, look what it did. Yeah, so we're having our session here, and I gave this signal straight away during the session that price should drop here, and specifically I am waiting for this level. Okay, as soon as I gave that as a signal, look what price did. So if people were short and they placed their stop just above this high, they would have got killed. Okay, and then price ran your way. All right, and those that trailed their stop quickly during the New York session, it ran back up quickly. So whoever trailed their stop down, it just killed them, and then price continued falling. Okay, so the condition is not great. I'll keep repeating it so people get it in their head. The condition is not great, so be careful. So let me just quickly run through what I mean by liquidity pools. Above highs and lows, okay, that's where the market is always going for. Always. The market doesn't move because of trend lines. It doesn't move because of these patterns, harmonic patterns and all that things. It's not, there's nothing. It's only going for liquidity. Okay, and where liquidity is, the highest level of liquidity in the market will be above a high and below a low. Okay, so these equal lows had a lot of liquidity. That's why market ran there. right? So in this condition, that's all the market is going to do. Above highs, it will run there. Below lows, it will run here. And see how it reacts after running below and above highs. Okay, equal lows, it run it and comes back up. This high, it run it and comes back down. Yeah, and then here we have equal lows. We call it engineering of liquidity. They do it on purpose. Okay, and then go back up and then later come back and run it. Yeah, so that's what's going on. There was a good one on euro, the engineering of liquidity. So price is coming up, instead of it going to run this high, look what it did. It stopped and came down. That's engineering. They have done it on purpose for a later comeback. Okay, came back down, took some time, but ultimately they came and ran it right there. Yeah, so that's all the market is doing right now. Until we get a good condition with the dollar, then we can have these kind of moves where it doesn't run stops. When we do have these kind of moves, it's only going to run once. So as price is going up like this, they will run a liquidity pull once or twice before price gets to its destination. So we enjoyed this run up and there was no stop run. Okay, what do I mean by that? They did not go below a swing low. Yeah, they won't go below a swing low when the market is sweet and nice like this. This is the condition we want to be trading in. Yeah, so if you are clever, you will wait for these conditions. But if you don't want to be if you don't want to wait and you still want to trade, then risk small and take profits early. Yeah, take profits early, because you don't know, we don't know, I don't know where it's gonna stop and turn, right? I don't know where it's gonna stop and turn. And a typical example is dollar CAD, right? And again, this is another example of engineering of liquidity. When was it? I think on Wednesday, I was looking for price to come up here, one of these levels, and then I'll go short, right? It didn't. It left this clean, equal highs here, right? And then run down. Where did it run down to? Here, to take out these stops. So people that bought it, their stops will be down here automatically. That's what everyone has been trained to do. Yeah, you will not place your stop down here because that will be too big, right? So between this low and where price stopped, in there somewhere your stop will be there, and then they will run you out and then go up. Okay, and look what they've done again. They've left equal lows there again. So what do you think that is? It's engineered. They have left this pool because someone bought here, their stops is still there, someone has bought there, those lucky people that were able to catch this long, their stops is still here. They will come back and run them. It's guaranteed. Maybe today, maybe Monday, but they will come back and run them. Watch and see. All right, so that's how you identify liquidity pool.